how to calculate real estate on a monthly basis, including tax benefits. Have you ever wondered how to break down the numbers for a rental property and truly understand what it costs or earns you on a monthly basis? Whether you are a beginner or an experienced investor, knowing how to calculate all the factors, including tax benefits, is essential for making smart real estate decisions. In this video, I will show you step by step how to calculate the monthly cash flow of a property, factoring in everything from rental income and expenses to depreciation and tax advantages. By the end, you will have the tools to assess any property like a pro. Let's dive in. So we have a property with a value of 311,000 euros. So price per square meter would be 4,319. So you see it's already a bigger city. We have 72 square meters, no parking space or garage, no furniture is included in this calculation. If you furnish an apartment yourself, then this can obviously be mentioned. So again, value 311,000 euros. Down payment needed to buy such a property would be 7%. This percentage depends on the federal state in Germany, because you have a higher or lower land transfer tax in different federal states. So in that example, we have 5% land transfer tax. We have 2% costs for the notary and the land registry entry. So we would have 15 plus 6,220 equity capital, which is needed. So in total, unit plus costs for land transfer tax and notary would be 332,000 euros. We have net rental income per square meter of 16.67 euros. This apartment is already rented out, so these are real numbers. So net rental income per month would be 1,200 euros, which is always the cold rent. Okay. So annual rental income would be 14,000 euros 400, which leads to a rental yield of 4.63%. This is one of the most important numbers when it comes to real estate as an investment, because this describes how profitable this investment actually is. You can calculate this rental yield if you calculate the annual cold rent divided by the purchase price. And this should be at least more than 4, because if we have interest rate of 4% and you have at least a rental yield of 4%, you're actually not losing any money, because the principal rate is just a repayment of the loan itself. And if you pay 10,000 euros back to a loan, you own 10,000 euros more of the property. So in my opinion, it's not like a real cost in general. So if we have more income than the interest, then we know, okay, we are already making money here. Equity for purchasing costs, so land transfer tax plus notary fee combined, would be 21,000 euros. So if you have saved 21,000 euros, you could buy such a property with a value of 311,000 euros. Okay. Additional equity, 0 here. So there is no additional equity on top. So total equity remains 2177. You take 100% financing from the bank and you just put 21,000 euros down for the down payment. So let's talk about costs. So again, loan amount would be 311,000 euros as mentioned. So we have rental income. This is obviously on the plus side. Minus interest rate for the loan would be 12,000 euros. So we know income is higher than interest. There is no additional loan included. Sometimes it makes sense to combine two loans for KfW, for example. Then non-deductible ancillary costs not included, and deductible ancillary costs, tax deductible, would be 2,317, for example, property management. So we see it would be an additional payment of 357 euros annually that you have to pay out of your own pocket after the rent that you receive, but before the amortization and the tax refunds. Amortization rate is the principal rate of the loan, so the actual repayment, which was not included in this calculation here. And the tax refunds are not yet included here. So it would be 357 euros annually. Now, let's look at the tax benefit, which is one of the most interesting things when it comes to real estate. So we have rental income of 14,400 annually, which increases your taxable income in the first place. Second, we would have interest rates. So we have 14,000 euros plus minus 12,440 because interest is entirely tax deductible, minus the deductible costs like property management, for example, 2,317 annually. Then we have depreciation of buildings, which is at least minimum 2% in Germany for every property that you rent out. Okay? Minimum at least 2%. So 2% would be you can depreciate the building value without the land of this property over the next 50 years with 2% per year, which would be 5,989 as tax deductible expense. And depreciation is not a real cost because the tax office just says, okay, the building fabric is losing its value. So we are giving you already a tax refund because you might have a renovation in future. So you can already save taxes now. Furniture would be also tax deductible, but as mentioned earlier, not included in this calculation. So we have in total, if we have plus 14,400 minus these tax deductible expenses, a tax result of tax estimate result would be 6,346 as tax deductible expenses. So now you will have a tax rate of 42% in that example, which is pretty easily to achieve in Germany, unfortunately. So if we have 6,346, you receive 42% back from the taxes, would be a tax refund in total of 2,665 euros. So you're investing in real estate, you're actually building wealth, but you receive tax refunds simultaneously for building wealth. Now, if we deduct everything, including the principal rate, so if you remember, we had costs of 357 euros annually, okay, plus the tax refund of 2,665, which you get back. So we would have a surplus of 2,308 euros annually. Now we have the amortization rate, so we actually have the repayment rate of the mortgage. This would be 1% in that example. Well, why 1%? We have a lower repayment rate in the beginning to protect your cash flow. So you can invest in more real estate because you have more savings on a monthly basis. You build up a real estate portfolio. And when you stop buying further apartments, then we can increase that amortization rate. Or you always have the option, if you do it correctly, that you have 5% unscheduled repayment every year. So you can decide if you pay off the mortgage faster, but you don't have to, which gives you more liquidity and especially flexibility for your financial planning. So we have 3,110 euros that we pay back annually, at least in the beginning. So we would have a monthly cash flow of negative 288 euros before tax. If we now include the tax benefit here, which means from the second year onwards, when you receive the tax benefit for the first year, you only have to invest in that example at least 66 euros per month out of your own pocket, and all the costs are already included in this calculation. Well, why is this now a good investment? Well, if you are investing 66 euros, you only have to do that for 3 years. Because in Germany, you can increase rents every 3 years by 15 to 20%. It depends on the city. So after 3 years, you increase the rent. So you have a much higher cash flow now because the costs remain the same. You increase the income. So you are either cash flow positive Or at least you don't have any co-payment anymore. Well, if that's the case, you're only investing 66 euros over 3 years to repay a mortgage of 311,000 euros. So you're investing 66 euros times 12 times 3 to create a wealth of 311,000 euros. And that's the power of real estate. And that's the reason why it makes so much sense to consider a real estate investment, even if you have 66 euros co-payment. Let it be 100 euros. It might be 150 in the beginning. It depends on the strategy. Depends on if you prefer high monthly cash flow as soon as possible. Would you like to have highest depreciation, tax benefits, and so on? But in general, such a real estate investment would definitely make sense if it's a good location, etc. Even if you have 66 euros co-payment for 3 years. Wow. So there you have it. A complete breakdown of how to calculate a property's monthly performance, including the often overlooked tax benefits. Real estate isn't just about what you see on the surface. It's about understanding the numbers behind the investment. If you found this video helpful, don't forget to like and subscribe for more tips on real estate investing, financial strategies, and maximizing your returns. And let me know in the comments, how do you approach property calculations, or is there a topic you would like me to cover next? Thanks for watching, and remember, in real estate, understanding the numbers is the key to unlocking success. See you in the next video.